My name is Mark Lockhart and I'm with Real Broker. My partner, Jocelyn Legault, and I, we talk to buyers every single day who always have a ton of questions about getting your mortgage pre-approval. We don't always have all the answers ourselves, but we have the team members and the contacts to help you out. So today, we brought Cory Vance with DLC A Better Way here to answer some of those questions and lay out the whole process for you.
Thanks, Mark. Ultimately, going through the mortgage pre-approval process should involve a mortgage broker, and the sooner you can get them involved in the process, the better. The first step is actually assessing your budget, how much money's going into your account and how much you're comfortable paying towards a mortgage before you even contact the mortgage broker. The mortgage broker then will start to take you through a process that will involve the application and gathering the documents. The mortgage application process is going to involve a few key things when we think about your situation. It's going to be gathering where you live, where you work, and your assets and liabilities. Through that part of the process, we kind of assess your income. And when we talk about your income, we're going to need documents. Those documents are going to be a pay stub, a letter of employment, could be a T4 or could be a tax return. It really depends on the type of income you're getting, whether you're hourly or salary or business for self. The second part is going to be the down payment. Where's that down payment coming from? It can come from an RSP. You can pull money out of your RSP as a first-time home buyer. It can come from a bank account, and it can come from a gift from an immediate family member. The third aspect of the application that is important is going to be your credit history and your debts. How many loans do you have? Do you have credit card debt? Be aware, a car loan payment can greatly impact your ability to qualify for a mortgage, depending on that payment. A mortgage broker will assess all three of those things in the application, gather the necessary documents to show that there's there. And this is the key piece, is to make sure that we're on a solid footing together, but then being on a solid footing allows us to act quicker when it comes to writing an offer. Once you go through the application process, a mortgage broker will be able to determine a list of documents that you're going to require to complete the pre-approval. And that will go from income, down payment, and credit information, and that will start the next part of your process. When we get to the application, what will come is a list of documents you're going to need. And when we start to talk about the three different components of the pre-approval, the income component is going to be critical. The income component will depend on what type of income you make. Are you salary? Are you hourly? Are you self-employed? That will dictate the documents needed to support the application. That list can range, if you're an employee and your salary, a pay stub and a letter of employment. For some, it may require a T4 if you have bonus income. And third would be a set 2 years of personal tax returns to confirm that income. When we talk about down payment, there's a few different ways that you can come up with a down payment. The first can be savings or bank accounts, and getting a 90-day history on those accounts and where the funds came from. The second is going to be, as a first-time home buyer, you're able to use your RSP. When we talk about the down payment, the minimum down payment to buy a home is going to be 5% of the purchase price, up to $500,000. It goes a little bit higher as you move above 500. But the third type that we talk about is the gifted funds from an immediate family member. So you can get a gift from an immediate family member to put towards your down payment. So those are the three main types of the down payment that we need to confirm, and some would be in the form of investment or bank account statements, or an RSP statement, or a gift letter from a family member. Third part of the application is going to be credit. When we talk about credit, there's two components. How much debt you have, what are the loans you may have, the credit card payments, but also your credit score. The key things to remember are car loans can chew up a lot of your ability to borrow or qualify for a mortgage, so be careful on getting a car loan before you get a mortgage pre-approval. The credit score is going to be a function of how much credit do you have outstanding, how have you made your payments. Any mortgage broker should go through what a good credit score is, minimum scores to have, and you just need to be cognizant of what that is during the process. The final step in the pre-approval is you've completed the application, you have all the documents to your mortgage broker, and they can assess your situation. What happens from there should be a planning meeting where you go through what you're pre-qualified for, but also an understanding, I call it Mortgage 101, what are the mortgage options out there? There's fixed rate mortgage options, there's variable rate options. understanding what your payment is for a certain price point and how a down payment can impact the monthly mortgage payment. But as well, during that planning session, you're going to be talking about closing costs. You're also going to be talking about the importance of life insurance to protect. There's many other aspects more than just the mortgage payment that you need to consider as you're going through that process. So from there, we have the pre-approval in place. We know how much you can qualify for. The key thing, and I probably should have said it earlier, is to avoid the online calculator and the 60-second mortgage pre-approval where you input your income and you get a mortgage amount. That is fraught with potential issues where the rug can be pulled out from under you. But the good part is you've gone through the process and we're on a solid footing. And being on a solid footing allows you to confidently make an offer and react quicker, which is important in this market. From here, we get to move to the fun part. I have kind of the nasty work where I do the unfun stuff. Your realtor takes you through the fun part of finding that property that fits your needs. So you found the right property. Now what do? The great news is a lot of the heavy lifting was already done. We've completed the pre-approval. So what happens now is you have an accepted offer to buy your new home. And from there, what is required to move to the next step and start to work on the financing approval is going to be the MLS and the accepted offer. As soon as that is accepted, you want to get that to your mortgage broker and you can start to work towards the next step of satisfying your financing condition. There's going to be a few different conditions on your offer. I'm only going to focus on the financing condition today. So from here, time is of the essence. Typically, you have 5 to 10 business days to get financing in place. And there's going to be a list of documents that you provided already. And depending on how long it's taken, you may have to provide an updated pay stub. All the documents on file need to be relatively current to proceed with getting an approval from a lender. And if you're putting less than 20% down, you're also going to require the approval from the insurer. So there's 2 levels of approvals when you're putting less than 20% down, the insurer and the lender. The lender is going to review that document package, including the down payment, including the income, including the property. They're going to assess the value of that property and whether a full appraisal is going to be required. They will come back within 2 to 4 business days and they will have what's called a lender commitment. The lender commitment will be reviewed with you to make sure that all the terms and conditions are going to be satisfactory, including the monthly mortgage payment, but also if any other documents are required, it is imperative to get those additional documents into the lender so they can sign off and confirm that you're in a position to waive your financing clause. So, great news. We've removed our financing condition. Your realtor is going to be working with you to talk about home inspection and condo docs if it's applicable, and I'll let them focus on that. But the good news is from here, what happens is we start to think about getting your home insurance in place. And if we have 30 days or 45 days before you take possession, you're going to be meeting with a lawyer 7 to 10 days before closing to sign mortgage documents and also provide the balance of your down payment. That's a critical piece, especially if you're pulling money from investments. You want to make sure that you do that early enough that the funds are in your account to provide to the lawyer for closing. Then the final day is the fun day. You've packed your bags, you've packed everything for the house, you've signed with the lawyer, then you have possession. That's when the keys are released and then you're going to be working on moving into your new home. So we've gone through that process from the beginning of getting the pre-approval to writing the offer and writing the offer to taking possession. Sometimes that timeline can take 30 to 60 days. So the good news is we've made it, you've taken possession of your new house. Once again, it's Cory Vance from Dominion Lending Centers A Better Way. Thanks for listening. Obviously, there's some more nuance and everyone's situation may be a little bit different. So I would encourage you to reach out at the contact below and run your situation by me at any time. Looking forward to chatting with you.